Hello everyone, I hope all of you are doing great and welcome back to the fourth and the final day of the ACCA's Practice to Pass webinars, and this is the fourth and the final day, and this is going to be one of the most critical and I believe a sensitive day, because today, or for that matter tonight, we are going to cover many topics rather than focusing on one single topic. So tonight we are going to explore the topics which are classified as the minor topics. Minor topics are normally not well prepared by the failure students. Students who tend to fail this exam are never absolutely prepared with respect to these minor topics. But wait a second, why are we discussing the failure students? Because you're not going to be one of them, and definitely with all your hard work and your dedication, and if you are going to follow my instructions, I truly believe on that 5th September, Monday 5th September 2022 will be a winning day for both of us. Okay, if anyone out there who wants to jump into the WhatsApp group for the September 2022, first of all, you will get the link within your chat section or question and answer section. You will get the link for the WhatsApp group. But still, if you are unable to join it, you can contact me on my personal number, which is available on WhatsApp, and then I can share the WhatsApp link with you. No worries, no problem. So this is the storyline, and where were we? Now we all know that overall 7 areas makes up this AA syllabus. The first 3 areas were major areas which we covered on the day 1, day 2 and the day 3 of the webinars. Day 1 was all about risk, day 2 was all about internal control systems, and day 3 was all about substantive procedures. So if anyone out there who has just joined us and who has got nothing to do with day 1, 2 and 3, he or she missed out the day 1, 2 and 3, the first good news is that the link of the recorded day 1, day 2 and day 3 is now available in your WhatsApp group. Secondly, and most importantly, day 4 has got nothing to do with day 1, 2 or 3. So it's a brand new story, brand new day, great energy, in fact more energy and more power to you, and let's make this day a very productive day, because we all know that the minor areas are 4 minor areas. Let's try to explore all 4, and we all know that out of 100 marks, bare minimum 30 and approximately up to 40 marks will be around the minor areas. So it's very important. Some would say equally important. I might say it's more than the important. It's more important as compared to any particular one major area. So all the minor areas are more important as compared to audit risk. All the minor areas are more important to the internal control systems. So this is why I believe we need to invest a complete 4th day on the minor areas. Okay. Now, what about exam format? First of all, you have to understand within your section A, more than 50% marks, approximately 20 marks out of the 30 marks will be from the minor areas. What about section B? Well, out of 70 marks, approximately 20 marks out of the 70 marks will be on minor topics. So that makes overall approximately 40 marks, on the minor areas. So you cannot ignore the today's session. The pass rates are so pathetic because nobody seems to prepare the OTQs, nobody seems to give due respect to the minor topics, and everybody seems to be focused on risk controls procedures. That's it. But you should not be doing it. You need to invest quality time on the OTQs on a daily basis, and you need to invest quality time on minor topics. Maybe 3-4 days would do the job. I hope you are attempting everything on the ACCA's practice platform. I hope you are solving 3 OTQs in the morning, 3 OTQs in the evening. I hope you are not ignoring the bookish knowledge-based questions when you are attempting a full past paper question. Don't ignore them. Give them due time and due respect. I hope you are absolutely clear once you have attended the first 3 days of the webinar, because the first 3 days of the webinars were allocated to the 3 major areas. I hope you're not going to ignore the minor areas, and that is why you are here today, and you will listen to my instructions and you will solve the questions. Last but surely not the least, you need to attempt the mock exam, at least 3 of them, and you need to make sure at least one of your mock exams should be marked by an expert tutor. It's mandatory. This is absolutely sure thing. So according to the plan, we are here on day 4 and we need to start with ethics. We need to explore corporate governance. We will go into internal audit and we'll try to finish off with the audit report. Okay. So let's start the first minor topic, which is called ethics. Now the first minor topic, which is called ethics, and I need to be a little quick if we need to cover everything, so I need to speed up. Now, according to the ACCA, there is a conceptual framework which the students needs to understand. Now that conceptual framework has got 3 things in it. Number 1, the fundamental principles, which we should not make any compromise on it. Number 2, the threats which could affect the fundamental principles. Last but surely not the least, there are safeguards which would avoid or which would mitigate the impact of the threat. So there are 3 things which we need to understand. Let's start with the first one, the fundamental principles. Now there are 5 fundamental principles. The first one is called integrity, which means we have to remain straightforward and honest in all professional relationship. Confidentiality, we need to respect the information which we are going to obtain because of the nature of the job. Objectivity, we should remain unbiased. We should not be in favor of the client. We should not be against the client. Professional behavior, we should comply with all the relevant laws and regulations. Professional competence and due care, we need to make sure if we are performing a particular job, we should be competent enough to handle it. And we need to work with due care, with due diligence. Negligence is not allowed. So these are the 5 fundamental principles. So we need to understand 3 things. Number 1, fundamental principles. We are pretty much done with it. Now we need to go to the threats. Now the threats could be just like the fundamental principles ICOPP, or you could say ICOP square. The threats are ASSIF. The first threat is called advocacy threat. You cannot promote your client. You cannot defend your client. If you're going to promote the client, you will be considered as advocating the client. If you're going to defend the client, you will be seen as taking the sides of the client. So you cannot be the promoter or the defender. This is what we call advocacy threat. You should avoid any financial or non-financial interest. We call it self-interest. Because of the self-interest, your behavior, your judgment will be inappropriately influenced. So it's not allowed. You cannot perform audit of a particular item or a subject matter which you initially prepared. So self-review threat is a situation where the audit firm will be involved in auditing something which they originally, prepared it. So for example, if I have revalued your non-current assets and then if I am going to perform your audit, I will be auditing the work which I already performed or I executed it. It's called the self-review threat. Why self-review threat is important? Because the auditor will be unlikely to admit the errors, or they might not be able to identify the errors at all. Number 4, intimidation threat. So this could be an actual or a perceived pressure from the client. They might try to influence the auditor, undue influence. They might try to exercise undue pressure. So this is what we call intimidation threat. Last but surely not the least, familiarity threat. Familiarity threat means when the auditor becomes too sympathetic or too trusting of a client, because of the family relationship or any other reason, we call it familiarity threat. Okay, so here are a few examples from advocacy threat, self-interest threat, self-review threat, intimidation threat. So let me quickly skim few of them for you. For example, if I am financially dependent on one particular audit client, this is what we call fee dependency, and this is the supreme example of self-interest threat. So the rule says, the ACCA says, if you are getting 15% or more audit fee from one particular client that is a listed company for back-to-back 2 years, for consecutive 2 years, we consider that situation as if we are financially dependent on that client, and we call it self-interest threat. Obviously, we cannot accept gifts and hospitalities from the client. We should not have any financial interest in the company, such as we should not hold any shares. If any member of the audit team has shares, we should remove that particular member from the audit team, or that individual can dispose of the shares and he or she can continue with the audit engagement team. But just imagine if the shares are owned by the partner of the firm. So we cannot say, okay, fine, let's remove this partner, get someone new. No, if the partner holds the share, by simply removing that partner from that engagement team will not work. You need to dispose of the shares, otherwise you cannot execute that particular client. And similarly, what's contingent fee? If your audit fee is dependent upon a financial outcome of the client, we call that situation contingent fee. Contingent fee is strictly banned. It's not allowed. Example, if my audit fee is 20% of the client's net profit, and let's say client's net profit is 100,000, that means my audit fee would be $20,000. Okay, at the end of the audit, I might realize that the client has not charged a particular impairment expense which they should have charged. Let's say the amount is $50,000. Will I be, should I be willing to, make the client realize that they need to write off 50,000 more as an impairment expense? Not really, because if I'm going to do it, their net profit will fall from 100,000 to 50,000, and as a result of that, my audit fee will fall from $20,000 to $10,000. So that is why the audit fee dependent on the client's financial outcome is not allowed, and it's called contingent fee, which is strictly banned. You cannot provide accounting, bookkeeping, internal audit, or any kind of services to your listed audit client, because that would create self-review threat. Intimidation threat. If your client knows you are financially dependent on them, they will try to abuse the situation. If the client is offering you gifts and hospitality, so they will expect some favor from you in return. So this could lead to intimidation threat. Family and personal relationships could come in between your professional work, and they could create unusual pressure for you, and this could be an example of intimidation threat as well. So long association of senior personnel, family and personal relationship, all those creates familiarity threat. So this is it. Well, another topic within that ethics chapter is called conflict of interest, which we discussed on the day 1 of the webinar in the question called heart. So you're supposed to do it on your own. Well, we are not going to accept or continue with any XYZ audit client. We are going to perform a mechanism called client screening, and client screening has got few ingredients in it, such as triple B, triple R, IMMF. Now, what's that? I will seek the professional clearance from the outgoing auditor. That is some kind of an NOC, no objection certificate. I will make sure I've got the competence to do the job. I will evaluate preconditions for an audit. Now, preconditions were discussed, I think, on the day 1 of the webinar. I need to make sure, do I have the resources? Can I handle the risk? If the client's reputation is not great, I might not accept the client. I need to evaluate my ethical issues such as independence and objectivity. I need to evaluate the integrity of the management. If it's not that great, I should avoid them. I need to make sure I know about the source of income, the nationality, the in and out of the client. We call it client due diligence, money laundering. What if they are involved in terrorism or anything illegal? So I need to know who they are and what they actually do. Similarly, I need to make sure that this whole assignment should be a profitable one. So we need to discuss the fee before we accept a client. Well, preconditions for an audit. There are 3 preconditions for an audit, and even this was discussed probably on day 1 or day 2 of the webinar. So this is it. I am done with the topic called ethics. Now I need to move to the exam requirement. So first of all, what kind of exam requirement we should expect from this topic? My dear students, first of all, you need to understand ethics is a minor topic. And if I'm saying it's a minor topic, it is a hot topic for your section A. But having said that, I'm not saying that it is not going to be tested in section B. Well, in the section B, ethics could be tested in the form of knowledge based, such as preconditions, such as triple P, triple R, IMMF, such as you might need to define or explain ICOP square, that is the 5 fundamental principles. Maybe you need to define, with example, the 5 threads. So all those things are extremely important for your straightforward bookish knowledge-based questions. Even the engagement letter is an important topic for your straightforward bookish knowledge within the section B. But can we expect this ethics topic as a scenario-based question? Yes, we can expect that. Minimum 6, maximum 10 marks, not more than 10. What would be the exam requirement? The exam requirement would be identify and explain 3 or 4, maximum 5 ethical threats. So you need to identify the threats and you have to explain them. You can identify by copying it from the question, but you have to come up with explanation. And now, parallel to that, in the tabular form, for each thread you have to suggest a safeguard. What do I mean by safeguard? Safeguard is an action which will reduce the risk, to an acceptable level. What's the marking scheme? Well, the identification of ethical thread will give you half mark, the explanation of ethical thread will give you another half mark, and the safeguard will give you 1 mark. To earn a full mark of each thread, you must explain. So if you're going to identify the ethical thread from the question, it's not enough. You have to explain it. How are you going to explain it? You must explain how the auditor's objectivity or independence could be compromised because of this situation. How the auditor's behavior could be adversely affected because of this situation. How the auditor could become biased because of this situation. So you must explain the ethical threats. Okay, now if somebody out there who's wondering or who believes that he or she is relatively prepared for the topic called ethics, now you need to practice a question on this topic called ethics. And for the sake of practice, I would recommend 3 questions. Number 1, which I'm about to go through with you, it's called Orange Financials, and it is available in your Kaplan exam kit. Number 2, if somebody wants to master the topic called ethics, okay, note it down please. Once you are going to prepare this chapter from the book, that is chapter number 4, you should prepare the test your understanding number 1 relevant to the ethics. So that's my question number 2. Last but surely not the least, there is a 3rd question which you can prepare and you should prepare. It's called hurling, and hurling is actually a question on audit risk available in your Kaplan kit. But the last part of the hurling is about ethics. So you could prepare the full question called hurling, not today, not tonight. Once you have prepared the audit risk, once you have prepared the ethics, go back to the exam kit, solve the question called hurling, and hurling will give you a great confidence. Is this clear? Okay, if an auditor has got shares in an organization, in their audit client, you have to understand and you have to evaluate who has got the shares. If the partner is having the shares and you want to continue with that audit client, there is only one option, and that is the partner must dispose of those shares. If the partner has disposed of the shares, we can continue with the client. If the partner is not willing to dispose of the shares, we cannot execute that audit client. Even if we are going to remove that partner from the assignment, still we cannot execute that client. But if somebody else is having shares, like audit manager, supervisor, trainee, X, Y, Z, you have got two options. That individual needs to dispose of the shares, and then that individual could be part of the audit team. If that individual is not willing to dispose of the shares, we can remove that individual from the audit team, and then we can continue with the engagement. Is this clear to you, Laiba? Okay, Fatima is clear. So is MN. Rihanna Edwards, I am referring to Kaplan study text. Okay, so Shaista and Laiba has got the same question: how to identify whether the company is a listed company or non-listed. Well, you don't have to worry about it, but because the examiner would clearly state it, don't worry. If the examiner has not stated it at all, well, I don't think so, they will. If they have not stated it at all, you can assume that, assuming this is a listed company, this is the storyline. Okay, Shivani is saying, please explain fee dependency 15% concept. Let's say I am an audit firm called KPMG, and all of you, hundreds of companies, all of you are my, clients. All of you are my listed clients, or whatever kind of clients, listed clients. Now, one of the clients, let's say the name of that company is called Mishra Limited. Now, if I am getting an amount from Mishra Limited, which is 16 or 17, 15, 18, 15 or more percent of the total revenue, of my total revenue. So if I am getting 15 or more percentage of revenue from one particular company called Mishra Limited, what I'm supposed to do? I need to remain alert. I need to wake up, because I am getting financially dependent on one company called Mishra Limited. If this situation happens for consecutive 2 years, or if it is expected that the second year's fee would be the same, 15 or more, this is a unique situation called that KPMG is financially dependent on a company called Mishra Limited. This is what we call fee dependency, and this is considered as a self-interest threat. Yes, the audit firm can perform payroll or bookkeeping services for a non-listed client, but with great safeguards. Otherwise, it's not recommended. What do I mean by great safeguards? You must ensure there is no other option. You must ensure there are separate teams. You must ensure there are, you need to be very, very attentive. Okay, so Mishra is clear now. Well, how long can we continue audit to a specific client? There is no limit to that. Engagement partner needs to be rotated off after 7 years, or maybe less than that if there is a familiarity threat. If there is no familiarity threat whatsoever, still after 7 years, the engagement partner needs to be changed. Otherwise, you can continue with the client. Ibrahim, are you clear? No, you cannot perform those services for your listed client. You cannot provide bookkeeping and internal audit services to your listed audit client. Okay, now please guys, hold your questions, please. Let me answer one last question before I move on. Anshira, sir, after 7 years, cooling off period of 5 years is necessary. Yes, the cooling off period for the engagement partner is 5 years, which means as an engagement partner, I need to stay away from that particular client for at least 5 years. Then I can rejoin or resume that client. Well, for the key audit partner and engagement quality control reviewer, the years for the cooling off period are relatively on the lower side. Refer to the book, guys. Please read the book. Okay. One last question before I need to move on is from Bhumika. Sir, please can you explain the threats associated with client moving to the audit firm and employee? Okay. Now, if I am working in KPMG and my audit client or our audit client is McDonald's, and if I join McDonald's and you guys are going to come for the audit at the McDonald's, you will see me over there, right? Oh, hello, how are you? Let's have coffee. So we'll have this situation when one of the audit team member joins the client. This situation creates familiarity threat because all of you will be, my ex-colleagues. But if one of the, associate finance director or assistant financial controller from the McDonald's join the KPMG, and KPMG recommends that this individual should be part of the McDonald's audit team. Now, when that individual is going to perform the audit of McDonald's, he or she might be auditing the work he or she initially performed. So that creates a threat called self-review threat. Okay, you guys need to read the book. Mahad, do you have any mnemonic for cooling off period? Well, just read the book. 5 years for the engagement partner. That's the most important one. During cooling off period, can audit you can do whatever you want to in that period. You can be auditor of any company in that period, but you can't be involved with the same company. You have to avoid one particular client because you are serving a cooling off period. Okay, great. So for the sake of practice, this is the question from your exam kit. There are two parts, part A and part B. The part B is a straightforward bookish knowledge question which could be tested in your exam. Explain the 5 elements of an assurance engagement. 5 elements of an assurance engagement. Now, what are those 5 elements? So here are the 5 elements of an assurance engagement. Whenever there is an audit assignment, there are 3 parties involved. Number 1, the practitioner, the auditor, the intended users, most importantly the shareholder, the responsible party, that is the directors. There has to be an appropriate subject matter in order to execute the audit, that is the financial statements. There has to be a suitable criteria, which is the financial reporting framework such as IFRS. The auditor needs to obtain sufficient appropriate evidence, and last but not the least, at the end of the audit, there has to be a written assurance report, and we call it independent auditor's report. So if you know all that, you can score 5 out of 5. We are done with the part B. What about part A? Okay, part A. You have to identify and explain 5 ethical threats, and then you have to recommend safeguards. So just like that, within your exam, there will be a table. You need to add the heading ethical threat. You can copy that heading from the question itself, and then the appropriate safeguards. Is this clear? So let's now read the question. All of you have got 5 minutes to read the question on your own, and let's see how many ethical threats you can identify. Your time starts now. Please do it, please. Yes, Shivani, Fatima, you're absolutely right. Yes, Shaista, sometimes an example of self-interest threat could transform into intimidation threat. For example, if I'm getting a lot of fee from you, it's a self-interest threat for me. But one day or the other, Shaista, you could abuse the situation as well. You could exploit the situation as well. You could exercise undue pressure on me. So that would, one day or the other, that could be transformed into intimidation threat as well. If you have to choose one, you need to identify the initial impact, which is self-interest in my example. Anyways, let's please read the question and try to identify ethical threats on your own. I'm giving you solid 5 minutes. Please do it, please. Okay, if there is question in the exam, least solution when partner having share in organization, we will select which options? Left the audit, dispose shares. If a partner is having shares in a particular audit client, a potential audit client maybe, I think the best option is the partner should dispose of the shares so that we could continue with the audit. We don't want to, we don't want to miss out the audit. So the best option is the partner should dispose of the shares. Yes, MN, advocacy thread, because meeting with potential, very right. We will, if there's a question, least solution. Least, what do you mean by least solution? What does that mean? Least solution is not appropriate English, so I'm not getting it. Least appropriate, maybe least appropriate option. So a least appropriate option, or the most pathetic option would be to not to be involved in that client. That's a pathetic option because we really want to continue with the audit. Yes, MN, self-review thread. Minimal question, Fatima, you are absolutely right. Intimidation thread, well done. Luxury hotel is a threat. What's luxury hotel? Yeah, they are providing you a hospitality. Yeah. So anyone out there, please read the question. Don't ignore it. Last 2 minutes and then so are you done? Can I have confirmation on that? Well done, well done, well done. That's great. So you are the audit manager of C company and you are planning the audit of Orange Financials, who specialize in the provision of loans. Company has audited Orange for many years. The directors are planning to list on stock exchange within the next few months and have asked if the engagement partner can attend the meeting with potential investors. If the engagement partner is going to attend the meeting with potential investors, he will be seen as taking the sides of the client. His objectivity will be considered as compromised even if it is not compromise, it will be perceived as compromise. So it's not allowed. It's not allowed because that would compromise the objectivity of the auditor. What should be the safeguard? The audit firm and the engagement partner should politely decline this request because this is not appropriate and this is not allowed. Okay, we are done with one. In addition, as the finance director of Orange Company is likely to be quite busy with the listing, he has asked if the audit firm can produce the financial statement. If the financial statements would be produced by the audit firm, this would lead to a thread called self-review thread. The audit firm would be reluctant or might not be able to identify the misstatements within the financial statements because nobody wants to admit mistakes. Safeguards: considering this company is planning to get their stock exchange listing. So as of now, they are not a listed company. If it is really, if this is a really weird situation, okay, with the help of separate teams, we might be able to do that. But considering the company is about to, get the stock exchange listed, it is recommended that we should avoid and decline this request and this assignment too. Okay. During the year, assistant finance director of Orange Company left and joined the audit firm as a partner. And it has been suggested that due to his familiarity with the client, he should be appointed to provide an independent partner review for the audit. That would create self-review threat because he might be evaluating things or the financial statements he prepared as an assistant finance director. Safeguard: he should not be working as an independent partner because he would be working, or the area of work would be the same. Once Orange Company obtained its stock exchange listing, it will require several assignments to be undertaken. For example, obtaining advice about the corporate governance best practice. C company is very keen to be appointed to these assignments. However, Orange has implied that in order to gain this work, the company needs to complete the external audit quickly with minimal questions. So this would be considered as an intimidation threat, undue pressure, undue influence. The auditor would feel, under pressure. The safeguards: the audit firm needs to have a discussion with the management and they need to plan the audit and they need to decide on a timeline. And if they are not going to cooperate with it, we will not consider continuing with this audit line. The finance director has informed you that once the stock exchange listing has been completed, they would like the engagement team to attend a weekend away at a luxury hotel, and this would be considered as self-interest threat because this kind of hospitality is a luxurious one and it's too much, and this should not be allowed. It's going to be consequential. It's not going to be trivial. In addition, he has offered a senior member of the engagement team a short-term loan at a significantly reduced interest rate. Again, a self-interest. The senior member of the engagement team would feel indebted and he might want to, pay off. He might not be able to raise the questions. So are we done with the question? Are you all clear? Now, what option do you have? You need to invest approximately 1.5 hours on this question. Consult the solution, extract your answer out of the past paper answer, type the solution on the ACCA practice platform, learn the safeguards, learn the explanation of those ethical threats. If you are going to face a similar question in exam, all that hard work of 1.5 or 2 hours will help you out. Moreover, if you want to practice something more on ethics, test your understanding. Chapter number 4. If you want to prepare anything else, okay, the third and the final question on ethics would be hurling. It's a question on audit risk, but it has a flavor of ethics as well. Am I clear? Am I done with the first topic? Oh, that's lovely. Tareem Fatma, thank you very much. Amen. Absolutely, Anshirag. That's great. That's great. Bilal, Usama, and everyone. Okay. Obviously, dear students, if somebody out there feels like I'm being too speedy with respect to this topic called ethics, let me tell you, all the webinars around the world by ACCA or any other organization, they are not meant to create your concepts from the scratch. It's not the real objective. If that is the objective, the webinar should be around 45 days before your final exam. The objective of the webinar is to just polish things, polish it up, just the finishing touches. What I'm trying to do here is, if somebody out there who is not a regular student with any learning provider, who is a self-study student, or if somebody out there, he or she did not have a good session and he or she has missed a lot of things. So I'm trying to help those. So I need to be a little speedy. So this topic, normally I cover it in 2-3 lectures, 1 hour each, approximately 3 hours. But as of now, we have covered it in 40-45 minutes. More importantly, your mics are muted as well. So we are not able to have a chit chat. That saves a lot of time. Otherwise, I would love to. Okay, Naila. So you don't answer my question. Which question, Naila? Mahad is saying, if practically speaking, if helping the client among investors is beneficial for economy. Mahad, don't think about the economy. There are many other stakeholders who could, help and boost the economy. You are an auditor, act like one, behave like one. Who's the auditor? An independent party. What's audit? Independent examination of financial statement. So don't be their friends. Okay, is it okay? Give me a second, please. Okay, Naila. Naila, can you please repost your question, because I believe I've missed it out. Yes, Ibrahim, you can. I'll let you know on WhatsApp. This mute thing is really bad according to Laiba, but it is what it is. Okay. Okay, guys, I think we are done with the first minor topic. That's great. It's an achievement. Let's go to the second minor topic pretty quickly. And the second minor topic is called corporate governance. Now, corporate governance is a mechanism through which the companies are operated and controlled. Yes, the companies are operated and controlled. So we need to control those corporate giants. If we are not going to control them, they might abuse, and they have actually abused the members of the company. They have abused the overall environment. They have abused the suppliers. They have abused the loan providers. So the aim of the corporate governance is to try and prevent the company directors, that is the agents, from abusing their power, which may adversely affect these stakeholder groups. What stakeholders? Shareholders, suppliers, customers, and most importantly, wider community and even the environment. So we need to have corporate governance in place. And what corporate governance is all about? I think corporate governance is all about making sure that there are strict rules and regulations about how to run the company. We need to make sure that there is a clear division between between executive directors and non-executive directors. We need to make sure that there is a clear responsibility that who's going to decide the remuneration of the directors, who is going to assess the risk, who is going to nominate the new directors, who is going to nominate the auditor, who is going to entertain the external and internal auditors. So one of the most important topic within the corporate governance is called committees. The first committee is called Remuneration Committee. Remuneration Committee is going to decide the salary, and Remuneration Committee should not have any executive director in it. 100% of the remuneration committee should be based on non-executive directors. Risk committee will have or might have executive director as well, but mostly non-executive directors, and they are going to assess the risk of the company. Nomination committee, we are going to nominate who should be the next external auditor, who should be the director, but ultimately the directors and the auditors are the agents of the company, so the members of the company are going to hire them, but nomination committee will guide them and nominate them. Last but surely not the least, because it's the most important one, audit committee. An audit committee will have 100% non-executive directors. Audit committee will make sure that they work as a bridge between the executive management and the external auditor. They will also evaluate the work and direct the internal auditors. So the audit committee is able to view the company's affairs. So they are going to evaluate the company, and they will work between the between the directors and the internal and external auditors. At least there should be 3 non-executive directors within an audit committee, and at least one of them should have the financial expertise. Oh, well, if we have an audit committee in an audit client or in a company, that will increase the public confidence. They will assist the external directors, and they will work as a bridge with the external auditor. So if you are an external auditor of a company and in your audit client there is an audit committee, that will be a great help for you. What are the benefits of an audit committee? It improves the credibility of the financial statements. The financial statements would be more pure, would be more trustworthy. The public would trust the audit opinion more if there was an audit committee. So there are many benefits of the audit committee. Even the burden to raise the finance, or even the burden of the external auditor, or even the burden to meet the listing requirements in order to list the company on a stock exchange, all of them will be reduced with the help of a thing called audit committee. Now, before I take on your questions, last but surely not the least, what kind of question you should expect from the corporate governance within your exam? Number 1, corporate governance is a very important topic for your section A. Number 2, audit committee benefits, objectives, activities could be tested. Risk committee, nomination committee could be tested within your section B as a bookish, straightforward, knowledge-based question. Last but not the least, there could be one exam requirement from the corporate governance which could be scenario based, and what kind of exam requirement that would be: identify and explain 2, 3, 4, 5, 6 corporate governance deficiencies, and then recommend the changes necessary to overcome those deficiencies. How to overcome those deficiencies? So same old story, you need to identify the corporate governance deficiency, and then you have to explain what negative impact it could have within the company, and what actions could be taken in order to overcome that corporate governance deficiency. So if you want to have a look at the question, so here is the question called Saxophone Enterprises. Let's go to the exam requirement. Describe 5 corporate governance deficiencies faced by the company, and then provide our recommendation to address each deficiency in order to make sure the company is making compliance with the corporate governance principles. So 5 plus 5, 10 marks. Now you have got 5 minutes to read this question on your own, and then I will explain few things, and then we are done with the second topic, and then we'll probably have a break. Mohammed Mahmood, if you are part of the WhatsApp group, there is a link available for all 3 days, day 1, day 2, day 3. So you'll get it. Naila, a senior member of the audit team has loan obligation with the client that is not performing. If a senior member has got the loan from the audit client, and that audit client is a bank, for example, okay, fine, you can get the loan provided you get it on the fair value, on a arm's length transaction, on a market value. But if that senior auditee member has got the loan but on a subsidized rate, not according to the market rate, that creates self-interest threat and it's not allowed. Naila, are you clear now? If you are auditing Apple, can you get Apple's phone? Yes, you can. If you're auditing Honda, can you get a Honda car? Yes, you can, but on the market rate, okay? Okay, that's great. Please read, everyone out there, please read this question called Saxophone Enterprise. You need to identify 5 corporate governance deficiencies out of it on your own. Yes, Shaista, ideally speaking, the head of the internal audit department should report to the audit committee, not to the finance director or executive management. If it is the case, it's a corporate governance deficiency. Yes, the balance is not right. Well done, well done. Continue with it. Mahmood, you need to contact me on my WhatsApp number. And this is my number on your screen right now. Contact me on WhatsApp. I'll share the link and then you'll get everything. And check out the description of the WhatsApp group as well. Thank you. Yeah, vacancy of CEO. Yeah. Yes, remuneration. Well done, well done. Okay. So let's quickly wrap it up. All of you have performed a wonderful job when it comes to this question. I'll give you one last advice. Yes, Mr. Bill is now the chairman, but he was the chief executive until last year. The chairman has to be an independent individual, so he should not continue with the job of chairman. And if he wants to, he can continue with the job of chief executive. And for the role of chairman, we need to recruit an independent individual. Well done. The board has 5 executive and 3 non-executive directors, so the board is not in balance. So we need to at least get 2 more non-executive directors in order to make sure the board is in the right balance. Explanation of this deficiency: if the non-executive directors are not in line with the executive, they might not be able to constructively challenge the decisions taken by the executive directors. Mr. Bill is considering his friend. Okay, fine, consider whatever, but he should be the relevant person. But I don't think so. He's the relevant person because he has the past experience of running a manufacturing company, whereas this is a service provider. Chief finance director is setting up the salaries. This should not be the case, because if it is the case, he might set more salaries of his friends or allies and maybe less salaries to particular individual who raises concerns or challenges his decisions. Recommendation: the salaries should be established by a thing called remuneration committee, and no executive director should be part of the remuneration committee. Okay, so I'm skipping it a bit. So dear students, listen to me very carefully. If you are absolutely conceptually clear with respect to Saxophone Enterprises and Orange Financials. You're not even halfway done. You need to type and learn these questions. Once you are done with Orange and Saxophone Enterprise, go to the respective chapters. This corporate governance is chapter 3 of the book. Ethics is chapter 4 of the book. Both of these chapters have got test your understanding 1 each, and you can prepare that test your understanding, which will maximize your preparation. So you need to type and you need to learn using the ACCA practice platform. With this lecture, you are not prepared. Maybe you are conceptually clear, but you are not prepared. In order to be prepared, you need to work harder and you need to invest time. 2 questions on ethics, 2 questions on corporate governance. 1 question on corporate governance and 1 question on ethics is right in front of you, Saxophone Enterprise and Orange Financials, and 1 question more on both of them could be the test your understanding 1 from the book chapter 3, 1 test your understanding 1 book chapter number 4, Kaplan book. Are we clear? How do we identify the board is in imbalance? Well, the question says there are 5 executive and 3 non-executive directors, so they are not in balance. They should be equal. Naila is saying, repeat the questions. Well, we just did that. Orange Financials and Saxophone Enterprises from the Kaplan kit, and from the book Test Your Understanding 1 chapter 3, Test Your Understanding 1 chapter 4. Is this clear, Tareem? Tareem Fatma, is this clear? Fatma Zora is absolutely clear. Laiba is clear. Shaista, are you clear now? How do we identify the board is in balance or not? Okay, Naila. Tareem, are you clear now? Yes, that's what I'm saying. See, let me help you. Let me tell you. I could have been, slowly but surely, just like risk. I could have invested 1.5 hour in ethics, 1.5 hour on corporate governance. Tata, bye bye. I'll see you somewhere, maybe in AAA. But what I'm trying to say, or what I'm trying to do over here is, okay, I could give you a little push in ethics, a little push in corporate governance, a little push in every minor topic, so that you could work it in your own and you will be done with the whole syllabus rather than, Yes, Shaista, executive directors and non-executive directors should be equal, apart from the chairman, who is also a non-executive director. So effectively speaking, non-executive directors, including the chairman, should be on the higher side. Is this clear to everyone? Can we have a break for 10 minutes? Because now we are done with 2 minor topics. And then after the break, we'll start internal audit. Then we'll explore its question. And then last but surely not the least, we'll go to the audit report. Okay, guys, thank you very much. I'll see you after 10 to 12 minutes at 6:10 p.m. Okay, considering the fact that we are done with the two minor topics, ethics and corporate governance, now it's time to quickly wrap up the third minor topic, which is called internal audit, before we move on to the final grand event called audit report. Okay, now let's skim this topic as well, which is available in your study text as well, called internal audit. Now, what's internal audit? First of all, you have to clear this doubt that internal audit is also, and it should be, an independent activity. But yes, the independence of the internal auditors are usually considered compromised because of the fact that they are normally the employees of the company. But you could counter that particular factor by simply outsourcing the internal audit function to a third party. Now, let me let me make you things clear by referring to the external auditor. The external auditor is there to independently examine the financial statements. On the other hand, internal audit is more of an objective assurance, kind of a consulting activity, and it is designed to add value to improve the organization's operations. So who needs an internal audit department? Well, if the scale and diversity of activities is on the higher side, if the complexity of the operations is on the higher side, if the number of employees are on the higher side, or if the cost versus benefit analysis suggests that we need to have internal audit department, maybe the senior management are willing to have internal audit department, maybe the current control environment is poor and weak, and we need an internal audit department. So that's how we determine whether we need an internal audit department or not. What's the difference between external and internal audit? I think I've already mentioned that the external auditor is supposed to express opinion on the financial statements, whereas internal auditor is trying to evaluate and review and improve the company's internal control systems. External auditors will always report to the members of the company, whereas internal audit department would ideally report to the audit committee. The reports of the external auditor are always publicly available. Well, on the other hand, the reports of the internal auditors are never publicly available. Last but not the least, external auditor must be independent of the company. On the contrary, internal auditors may be an employee of the company, but they could be independent as well if you have outsourced the function. What activities are normally performed by internal auditors? Well, they might evaluate the company's risk assessment process. They might test the effectiveness of the internal controls. As you observed on the day 2 of the webinar, mostly internal auditors were involved in testing the internal control systems. They might perform a value for money audit, such as economy, efficiency, and effectiveness. So similarly, internal auditors might provide recommendation on the prevention and detection of fraud. So these are the activities you need to be familiar with. There are certain additional roles assigned to internal auditors on the need basis. What do I mean by need basis? If it is required, then the audit committee would assign internal auditors with such assignments. For example, a fraud investigation assignment. For example, IT system review. For example, asset verification assignment, where they have to make sure that all those tangible non-current assets which are recorded in the non-current asset register, they actually exist. So if you were present yesterday or day before yesterday, this was somewhere, I think on the day 2 of the webinar, internal audit department was involved in a asset verification assignment, and hardly 15% of assets were, I think that the name of that question was probably equestrian. Mystery shopper visit. They are not going to disclose their identity that we are internal auditors, and they will experience what a normal or a ordinary customer experiences, and they will try to identify the loopholes. Internal auditor could help the external auditor. They could perform contract audits in order to verify whether the contracts made by the company are in the best interest of the company or not. What kind of internal audit function would be considered as a good one? I think which has sufficient resource. Again, if you were present on day 2 of the webinar, we realize if the internal audit department is under resourced, this is an important control which is compromised and we considered is as a deficiency. The internal audit department has to be well organized. The reporting lines should be clear. The internal audit department should be reporting to their chief internal auditor, and the chief internal auditor should be reporting to the audit committee, not directly to the management. Internal audit department should be independent. They should not be, biased. They should not be, their independence should not be compromised. There has to be the leader of the internal audit department called chief internal auditor. Internal auditors should never be involved in executive roles, no operational responsibilities. The audit committee should set the plan for the internal audit department, not the management. There should not be any limitation on the work of the internal auditors. Yes, there could be limitations on the work of the internal audit, such as maybe the internal auditors are the employees of the company and it's a limitation on their own, because somehow they will, their independence would be compromised. Okay, internal auditors could face a threat called familiarity threat because they are working in the same organization throughout the year. Okay, well, there is a fantastic idea which is, ruling all over the world right now, and that is you could outsource your internal audit function. Well, there are advantages and disadvantages of outsourcing the internal audit department. For example, the independence of the internal audit department would improve. Maybe more skills would be available with that third party. Maybe the risk of staff turnover could be passed on to that firm. Yes, there could be disadvantages that third party might not have the real knowledge of the client. Well, there is a possibility you might lose the control over the quality. There is a possibility you might face the ethical threat if you have outsourced the internal audit department to your external audit firm. Obviously, this is not allowed if the client is a listed company. What kind of internal audit assignments could be assigned to internal auditors? For example, value for money assignment, the 3 E's, operational audits, the audit of IT systems, and all that. Okay, give me a second, please. So here is the kit. Here is our exam kit. There is a question called equestrian. That's from June 2017. We did that question on day 2 of the webinar. If you were part of it, otherwise the recording will be available and is available in your group. Part A was a straightforward bookish knowledge based question. Part B, you had to identify 5 direct controls and 5 test of controls. Part C, you had to identify 5 deficiencies and 5 recommendations. Part D, explain the advantages and disadvantages for the equestrian company of outsourcing the internal audit department. Will you be able to prepare this on your own? Please answer this with the help of solution. Can I trust you on that? Part D, advantages and disadvantages of outsourcing the internal audit function, is a straightforward knowledge requirement. Aim for an equal number of advantages and disadvantages. So if there are 6 marks, go for 3 advantages and 3 disadvantages. Check it out. Advantage number 1, you will avoid the issue of staffing. You don't have to hire the permanent employees. You don't need to develop and design and, the internal audit department. It's an immediate solution. Outsource it. Done. The third party would have a huge, range of skills and experience. You might be able to control the cost as well. Disadvantages: if you are going to outsource it to your existing internal audit department, sorry, if you're going to outsource it, what are you going to do with your existing internal audit department? You might have to make them redundant. That could be a cost. You might face increased cost rather than lower cost. Confidentiality could be an issue. Control over the quality could be an issue once you have outsourced it. Are you clear? Will you be able to invest time and prepare it on your own? Will you be able to invest? Now, you might be conceptually clear, but you are not prepared for it. You need to invest 1 hour on the equestrian part D, and then you are prepared for it. Is this clear? So Fatima, Anshara, Tehreem, MN are clear. Yes, Ibrahim, you will be able to figure it out. Don't worry. Okay, Shivani is clear. Yes, three advantages, three disadvantages. Washington is clear. Faizun is clear. Sonika is clear. Absolutely fantastic. Okay, one of my most favorite question, one of the most important question is called Raspberry. Okay, guys, before considering we are heading towards the end of this session, one of the most important question is on risk is called BlackBerry. One of the most important question on control is called Raspberry, and one of the most important substantive procedure is called Gooseberry. They are from the same paper, March June 2018, March June 2018, March June 2018. Use the ACCA practice platform, prepare them, type them, learn them. You will feel good about it. Okay, what about Raspberry? Why I'm referring to Raspberry? Okay, let's check it out. Raspberry. So Raspberry is one of the question which I have covered during my normal classes, during the normal batch. So this question is about the payroll system and at what is the exam requirement. So you have to identify 5 direct controls and obviously 5 tests of controls, 10 marks, part A. Part B, 5 deficiencies, 5 recommendations, 10 marks, 20 marks. That's great. What about part C? Compare and contrast the role of external and internal audit for 5 marks. Will you be able to do that? Will you be able to do that? Mahat, don't use your phone, please. Okay, compare and contrast the role of external and internal audit for 5 marks. Will you be able to do that considering you have prepared this topic from the book? Can I have confirmation on that? Yes, Anshara, MN, Mahat are clear and they know how to, what's the difference between external audit and internal audit. So this is your 5 marks, right? Use the book for the further details. Difference between external and internal audit. Okay, let's go to the part part D. Describe assignments the internal audit department of Raspberry company could carry out, 5 marks. So you need to come up with 5 assignments. What assignments? Asset verification assignment, value for money assignment, operational audit. So the assignments are also available in your book. So will you be able to solve these 2 questions? Will you be able to invest 1 hour on each of these parts? Can I have confirmation on that? For 5 marks, how many points or paragraphs? You just need 5 assignments, 1 sentence on each assignment. Thank you, Sonika, Mahat, Fatma. That's great. No, sir, I don't know. Need you as a marker once I'm getting it. Laiba, you need to write 1 sentence per assignment. That's it. Don't worry. Okay, Naila, Washington. That's great. So this is it. We are done with another topic called internal audit. Now, dear students, as an external auditor, we can rely on the work of others. Sometimes we have to rely on the work of others. Now, there are 2 types of experts which an external auditor would look up to. Number one, management's expert. Number second, auditor's expert. What do I mean by management's expert? An employee of the company client or someone engaged by the audit client who has expertise that is used to assist in the preparation of financial statements. So maybe when it comes to the preparation of financial statement, the management engaged a civil engineer to somehow figure out the degree of completion of the building or a closing work in progress. That expert, because the work of that expert is relied by the management when they were preparing the financial statements, so that expert is called management's expert. What do I mean by auditor's expert? If an employee of the audit firm or someone engaged by the firm, maybe a third party, to provide the evidence, we call that auditor's expert. Relying on the work of an auditor's expert, I will not blindly rely on the work of the auditor's expert. First of all, I will evaluate the competence of that expert. I will evaluate whether that individual is competent. He or she should not be biased. I will agree the work, which kind of work he or she is going to perform. I will evaluate the work, whether the work has been performed in accordance to the agreement, and then I will make sure that the work of the expert is well referred to, reference to the work of an expert. What can you rely on the work of the internal audit as an external auditor? Yes, I could rely on the work of the internal auditor, provided that I am confident that the internal audit function is well managed, good enough competence, they are not biased, their objectivity is intact, so their work is well documented and well organized, and then I can rely on the work of internal audit. Okay, if your audit client is using a service organization, maybe for the payroll, maybe for the receivable collection, maybe for the pension, maybe for bookkeeping, this creates a threat called detection risk. But as a company, the company is allowed to outsource their activity. As an auditor, you need to be aware of the situation, and you need to work, you need to put an extra effort, because now you have to utilize the work of that service organization as well. And we call it, you have to come up with audit considerations relating to an entity using a service organization, because that particular company is utilizing the work of a service organization. Okay, there are automated tools and techniques available. Automated tools and techniques such as test data, also known as dummy data. You can apply dummy data in order to verify whether the client system is working appropriately or not, whether the client system will be able to prevent or detect the misstatements or not. If you're going to use test data, there are two options: live test data or dead test data. Live test data means when the system is up and running with the client's head office or the master files, you are going to use dummy data. We call it live test data. And if the client system is not up and running, it's not connected with the main server, and if we are going to use the dummy data, we call it dead test data. The second type of automated tool is called audit software. The auditor is going to use a software to interrogate the client system. The auditor is not using the dummy data, rather using a complete new software. That software could be a ready-made software called off the shelf, or it could be a well-designed customized software called bespoke software. Softwares are of a great benefit because they can scrutinize large volumes of data, which is not practically possible using the manual techniques. Softwares can perform calculations, software can perform casting, softwares can recalculate, software can prepare the reports, softwares can filter out the data into different types, softwares can extract samples, they can do many activities. Last but not the least, the third and the final automated technique is called the new modern technique, which you can expect in your exam. It's called data analytical tools. Data analytics. What's big data? Big data refers to large data. What's data analytics? You are going to perform certain techniques in order to verify or in order to quantify if there is any unusual relationship between the data. So this is what we call big data and data analytics. With the help of big data and data analytics, the audit firm would be able to identify unusual fluctuations within the data, and then further testing could be performed in order to verify whether if there is any unusual relationship between the data. So now almost the last topic which I will cover in detail is what we called audit reporting. Okay, give me a second. What is the difference in big data and audit software? Audit software is just a software. Big data means you are going to utilize the large volumes of data. It's not a software, it's a large volume of data, and you will try to extract unusual relationships within that data. Okay, Ibrahim, I'll go into the details of the audit report. I can't go into the details of completion, but I can surely go into the details of audit report. What about the previous videos? The link for the previous videos. No, smart, the software cannot do everything. Nowadays, the companies are having such a large volume of data that only data analytics could, figure out unusual relationships within that data. Okay, the link for the previous videos is available in the WhatsApp group. How are you going to join the WhatsApp group? The number, my personal number, WhatsApp number is available on your screen right now. You got to contact me and I will share the WhatsApp group link. What is the most reliable audit evidence and least reliable audit evidence? Well, this is a debate from the last class and I was unable to answer this yesterday. Well, the least reliable audit evidence is a client generated one, such as written representation. That's the least reliable one. Mahad, you are again using the WhatsApp. Okay. And the most reliable audit evidence would be which will be generated with a reliable third party such as bank. But the problem is sometimes a third party such as the payable might not respond at all, or they might respond, yes, we owe a balance, but they might not confirm what amount exactly. So it depends. Otherwise, if the third party is a reliable one, a professional one, if they are answering it, so considering the auditor is reconciling the client's financial statement with the particular third party, the third party evidence would become the most reliable one. Okay. Any other question? Yes, Umar, the most reliable audit evidence would be external confirmations, provided the external confirmation is from a professional organization such as bank. Your client's payable might not respond. So are you getting the point? Okay, Shivani is saying you said you will tell the strategy for the next upcoming days for exam. Okay. Okay, I'll tell you. Okay, Laiba wants a differentiation between material but not pervasive and material and pervasive. Okay, if I need to clarify between material and pervasive and material but not pervasive, I need to go into the audit report, right? Anshara, you must relate your procedures with the situation. You must be fully aware of the situation. Okay, there is a very important question from Abu Bakr, and the answer to your question, Abu Bakr, is definitely, definitely you should start with the section A. Washington, I'm really sorry. I tried to upload the kit. I don't know what went wrong. I tried it twice yet last night. It didn't go. Well, I'll send the latest kit right after this class. Right after this class, because I've cracked the latest double A kit, and you will be able to perform the search task as well. So I'll share the kit. Okay, which section to start with first in the exam? Definitely it has to be section A, because section A is a very delicate one. It requires fresh mind and energy. You can't risk it for the last half an hour or 40 minutes. Okay, what about time management? Time management. How many minutes do you have in your final exam? Okay, Umar, that depends. Umar is still stuck. Which evidence is the most reliable? It depends on the situation. If it is from a bank, obviously it's going to be the most reliable one. But if your client's lawyer is suggesting something, no, that's not going to be the most reliable, because the lawyer is after all getting paid from the company. So you can't 100% rely on that. So it depends. It's situational. So all of you have got 180 minutes, right? Faizun, you need to contact on the WhatsApp. Okay. Uh, if you have got 180 minutes, how are you going to divide your 180 minutes? 40 minutes for your uh, MTQs, 60 minutes for your first long question, that gives you 100 minutes, and then another 40 minutes each for your question 2 and 3 of the section B, that gives you 180 minutes. So 40, 60, 40, 40. Write it down. 40, 60, 40, 40. Yes, there is a question mark on the company's lawyer's objectivity. Yes, Asnan, you're right. That is why I'm not 100% relying on the company's lawyer. Okay, Laiba is saying that she is not that great when it comes to typing. So what if she attempts one long question and then she could have a break in the form of OTQs, then another 2 long questions from section B? Yeah, Laiba, if it works for you, and it will only work for you on the final exam day if you are going to apply this technique religiously when you are going to solve 3, 4, 5 past papers in a stretch, just like your final exam. So if somebody has got a customized strategy for himself or herself, or whatever your strategy is, you got to make sure you practice that strategy. On paper it looks promising, but you need to execute it as well. Okay, any other question? Okay, MN is saying, sir, I feel difficult to type as same like in the book. Well, don't worry. And Mahad is saying, I'm feeling anxious about the exam. So the answer to MN and Mahad is same. Select few questions on risk. Let's say 6 questions on risk. Type and learn them twice within 3 days, and you are absolutely well prepared for risk. Similarly, select 6 questions on controls. Type and learn those twice. Invest. Don't attempt them. Invest. Prepare them. Literally as if you are getting your final exam out of those 6. When it comes to substantive procedure, don't go for 6 questions. Go an extra mile. Go for 10 questions. So 6 plus 6, 12. add another 10 on substantive procedures, 22, maybe one on ethics, one on corporate governance, one on maybe going concern, one on subsequent events, and you are done. Yeah, if I have to attempt the AA exam tomorrow morning, I will start with section A OTQs, and then I will straight away attempt the substantive procedure question, and then I will go to the, maybe I'll go to the risk question or the control question, that depends. Fatima, sir, every September, every Fatima, I didn't get your question. Every September, the syllabus slightly different. Yeah, if there is any change, the changes across all the ACCA exams, they are always applicable from the September and onwards. For example, for the September 2022, the professional marks have been raised from 4 to 20 in AAA. So whenever there is a change, it is mostly it is applicable from September and onwards. Sir, please kindly share this handout PDF for today. Oh, well, you need to join the WhatsApp group. Then you need to check out the WhatsApp group description and you will figure out everything. Sir, is any chapter more important to read full text? Well, not really, but audit reporting is an important chapter which should be prepared from the book. Extremely important. Otherwise, chapter number 4, ethics and acceptance from the book, is an extremely important chapter to be prepared from the book. I missed OTQs in PM while prioritizing section C. Oh, okay, don't do it. That's why when it comes to PM, I always suggest start with section A, then go to section B and section C, and then come back to section B. But obviously, with the time management, you are not going to miss out anything. Any knowledge-based question list? No, not really. Your WhatsApp group is loaded with it. No, ideally speaking, you should not come up with definition in your own words. You got to learn it. Any professional marks in AA? No, there is no professional mark in the AA. Sometimes the examiner would say write a covering letter in the context of an internal control question. Sometimes for 2 marks. Otherwise, there are no professional marks in AA. There are no professional marks in any skill exam. Is this clear, Roshan? Sir, kindly share the name of 4 questions of both controls and audit risk. Most important questions. Okay, I will. Okay, give me a second, please. I'm working on something extremely important for you. Wait. Give me one more minute. I'm almost done. Okay. Can you is my screen available to you? Okay, Ibrahim Khan, I'm okay. This is great. Okay. So extremely important questions to be typed. You are not supposed to read them. You need to type them. And when I say type them, consult the solution. Type them as if this is going to be your final exam. Type them as if you need to prepare it. Don't just attempt it. Learn it. You know, be be polite with it. Extremely important questions to be typed and learned after the September 2022 practice to pass webinar. Prepare these 30 questions before attempting mocks under strict conditions. So if I'm saying 3 mocks, it means there will be 3 mocks means 9 more questions apart from these 30. Once you are done with these 30 questions, you are ready for the mock exam. Now, what's the breakdown of those 30 questions? Risk 6, controls 8, substantive procedures 11. Why so much? Because A, they are quick. A, B, their weightage in the final exam is on the higher side. Ethics 1, corporate governance 1, internal audit 1, going concern 1, subsequent event 1. Now, here's the list of the risk questions. The first 3 questions are with ratios. The next 3 questions are without ratios. Now, if you realize the question which we did are not available in this list, so you might want to, you can skip one of them and you can add those questions which we did in the webinar, because what we did in the webinar was, I remember the name was Heart, right? Heart had ratios. And what about without ratios? I think the name of that question was ESC company. Then what about controls? Well, controls, we did a question called equestrian. Equestrian. And there was another question called, what was the name of the second question? Whittaker. So you can skip few of them and you can, add them up. Substantive procedure. We did a question called Sagittary. And what was the other question which we did? Apart from Sagittary, what was the other question? Yeah, thank you very much, Anshara. It was spinach or something. So with respect to ethics or in financials, we did today Saxophone Enterprise for Corporate Governance. We did today Test Your Understanding 1, chapter number 9 for internal audit. Otherwise, we did Raspberry and Equestrian as well, but they are also part of the, for going concern, Test Your Understanding 3, chapter 11. For subsequent events, Test Your Understanding 4, chapter 11. So this is the list, this is the file which I will share with you. One could make compromise. You might go for 4 questions rather than 6, but you have to make sure you are doing it twice. You might go for 6 rather than 8, but you have to make sure you are going it for, like you are typing them twice. Is this clear? Any questions or concerns? Is this clear? Any other question? Now I am left with one last topic. I will share this file in the WhatsApp group. I can't share this file over here. I will share in the WhatsApp group. Okay, now we are left with one last topic from this webinar, and that one last topic is called audit report. And because of the loaded request, I will be going into the details of that topic. I will try to be slow. I will try to be in as much detail as possible. And dear students, this lecture for the next 1 hour or so will help you a lot, not only in your AA, but also in your AAA. Moreover, everyone out there, almost 99% students will get an exam requirement for 5 mark called impact on audit report. Impact on audit report will be tested within the question number 3, substantive procedure. So we need to be very well prepared for this topic called audit reporting. So, okay, let's have the final 10-minute break. It's 6:55 right now. Let's be back at 7:05. And we'll start the audit report and we'll explore the past paper questions relevant to the impact on audit report as well. So I'll see you after 10 minutes. Thank you. Bye bye. I'll see you after 10 minutes. Okay, boys and girls, ladies and gentlemen, now it's time to wrap up and let's start the last topic, which is called reporting. By the way, this is not what we call reporting. The overall topic is called completion, comma, review, and reporting. So I can't go into the details of completion and review. I can't explore going concern and subsequent right now. And that is why I'm straight away jumping into the thing called audit reporting. Now, what about audit reporting? All over the world, there are two types of audit report. There is no third or fourth or fifth type of audit report. There are two types of audit report only. The first type of audit report is called unmodified audit report, and the second type of audit report is called modified audit report. Unmodified audit report cannot be further categorized or divided or classified into any other type. So there is no further types for unmodified audit report. But yes, the modified audit report has got two types. So I think we need to keep it simple and we need to start with unmodified audit report. Now, unmodified audit report, also known as a standard report, a normal report, unmodified audit report will start with a thing called title. The title would always be independent auditor's report. Who is going to be addressee? The addressee will always be the members of the company. Number third, the auditor will express the opinion, and in the number fourth section, the auditor will emphasize why or how did he or she arrived at that opinion. So basis for opinion paragraph is a support paragraph for the opinion paragraph. In the basis for opinion paragraph, the auditor would highlight the accounting or the professional standards which he or she used in order to determine the opinion. The fifth paragraph is what we call key audit matter paragraph, and this paragraph is a mandatory paragraph if the client is a listed company. If the client is not a listed company, the auditor might or can skip this one. In the key audit matter paragraph, the auditor would highlight the important audit risk, important audit issues, and how the auditor resolved those issues. Other information paragraph is the number 6 paragraph, where the auditor would highlight that the auditor was not responsible for the audit of other information, but the auditor has read the other information. Now, what do I mean by other information? Within the annual report, there is a thing called financial statements along with disclosures. And yes, we are going to audit it. We are going to perform audit for that. But chairman report, operational information, message from the CEO, all those information contained within the annual report is what we call other information. Then the responsibilities of the management and those charged with governance for the preparation of financial statements, and then the responsibilities for the auditor's responsibilities, then the responsibilities of the auditor for the audit of financial statements. So that's number 8. Basically, there's a typo error. Then we need to report on other local and regulatory requirements if there is any. Then the signature of the engagement partner along with the name, and then the audit firm's address and the date. This is it. This is what we call an unmodified audit report, and there are no further types of it. Okay. What are key audit matters? Key audit matters are important matters which, in accordance with the auditor's judgment, were very important during the audit. Why we want to highlight those matters? So that the understanding of the users of the financial statement, most importantly the shareholders, could be improved. Each key audit matter should describe why the matter was considered to be important and how the hell the audit firm addressed the issue. Key audit matters might include important risk of material misstatement and how the auditor responded to it, important judgmental areas and how the audit firm performed those judgments, important events or transactions and how the audit firm performed the audit for that. Other information is any other information within the annual report apart from the financial statements. It could be the chairman's report, it could be the operating and financial review, it could be any social and environmental report. Is this clear to everyone? Unmodified report. Can I move on to the modified audit report now? Okay, everyone is clear except for Naila because she's unable to hear anything. Are you all clear? Yes, you are. So Naila, please rejoin, I guess. No, Mahat, key audit matter is not the same as emphasis of matter, and I did not discuss emphasis of matter as yet. So don't confuse yourself, buddy. So as things stand, are you clear with the unmodified audit report? Well, remember, within the unmodified audit report, the auditor's opinion would always be that the financial statements are reflecting a true and fair view. It's a mandatory case. Within the unmodified audit report, which we just finished, the auditor's opinion would always be that the financial statements are reflecting a true and fair view. Is this clear? Okay. Let's go to the audit report type 2, which is called the opposite of unmodified audit report, and it's called modified audit report. Okay, let's start the second type of audit report, which is called modified audit report. Now, as I told you earlier, there are two types of modified audit report. Number one, modified audit report without modifying the audit opinion. So the auditor would say that the financial statements are reflecting a true and fair view, but still the audit report would be a modified report. Modified audit report, yes, the report would be modified, but still without modifying the audit opinion means that still the auditor would say yes, the financial statements are reflecting a true and fair view. No exception, no if, no but, no nothing. Well, how is that possible? Yes, it is possible with respect to three possible cases. Modified audit report without modifying the audit opinion. What are those three cases? Well, those three cases are if an auditor is going to incorporate an additional communication paragraphs within the audit report would be considered as a modified audit report without having anything to do with the opinion. Now, what are those three additional communication paragraphs? The first paragraph is called MURGC, material uncertainty related to going concern. So if you are going to incorporate a paragraph, an additional paragraph within your audit report called MURGC, your audit report would not be a standard report. It will not be an unmodified audit report. Rather, it would be considered as modified audit report. But please understand, MURGC has got nothing to do with the opinion. Still, your opinion is that the financial statements are reflecting a true and fair view. Now, what's material uncertainty related to going concern? It means you want to highlight an uncertainty related to going concern, and that uncertainty is well disclosed, well quantified, well disclosed by the client within the financial statements. So considering the financial statements are reflecting a true and fair view, you can't complain about it, you can't modify the opinion. So your opinion is true and fair, but you want to highlight that particular adjustment or that particular situation or that particular disclosure. So you are going to use a paragraph called MURGC. Second possible additional communication paragraph is what we call emphasis of matter paragraph. So if there is any accounting adjustment or a disclosure which you as an auditor believes that it is important for the users to understand, you will highlight that particular thing using a paragraph called emphasis of matter paragraph. So the objective of MURGC and emphasis of matter paragraph is same, just to highlight. But you need to understand MURGC is only used when there is a uncertainty related to going concern. If the thing is not relevant to going concern, if it is any other thing, you are going to use a paragraph called emphasis of matter paragraph. If the auditor wants to highlight anything which is not currently part of the financial statement, maybe the situation of the stock market, maybe the economic condition, maybe the upcoming accounting standards, maybe any parliamentarian law or something, the auditor would use a paragraph called other matter paragraph. So dear students, all these three paragraphs wants to highlight something so that the users of the financial statements would become more aware of the things. But these three paragraphs are for three different situations. If you want to highlight any uncertainty related to going concern, you are going to use MURGC. If you want to highlight anything from the financial statements apart from going concern, you are going to use emphasis of matter paragraph. If you want to highlight anything not relevant to the current financial statements, but anything important, you are going to use other matter paragraph. So this is the modified audit report without having an impact on the opinion. So that's what we called modified audit report type number 1 without modifying the opinion. The last case, modified audit report and finally with the modified opinion. Now the auditor will not say that the financial statements are expressing a true and fair view. So this is it. Please concentrate. Modified audit report with modified opinion. So there are four possible types of modified opinion. Four possible types of modified opinion. And when you are going to modify the opinion, automatically the report will be modified. Four possible types. This is one, this is two. But this one and two are under the umbrella called the financial statements are not free from material misstatement. Now, as an auditor, you will evaluate whether the misstatement is material, whether the misstatement is immaterial, or whether the misstatement is material and pervasive. If the misstatement is not material at all, you cannot modify your opinion. So let it go. Note it somewhere and let it go. You might want to, have a discussion with the management that rectify it. If they are not going to rectify, you cannot modify the opinion because the misstatement is not material. If the misstatement is material but not pervasive, you will qualify your opinion. What do I mean by qualified opinion? It means except for this impairment expense, everything is correct. It's called qualified opinion, except for if the misstatement is material but not pervasive. But if the misstatement is material and pervasive, you can't say apart from this, apart from this, apart from this, apart from that. So if there are many material misstatements, or if the misstatement itself is a huge one and it has got a huge impact and it transforms the year-end profit into loss, or it renders the financial statement as completely meaningless, you will go for the material and pervasive situation called adverse opinion. So qualified opinion because of a material misstatement but not a pervasive one. Adverse opinion because of the misstatement being both material and pervasive. Last situation, modified audit report with the modified opinion, but now the auditor is unable to obtain the evidence at all. It's not about the material misstatement, it's about the situation, or it's about the fact. A very sorry situation for the auditor. The auditor is unable to gather the evidence. If that lack of evidence is immaterial, okay, let it go. If that lack of evidence is material but not pervasive, okay, go for the qualified opinion. So I don't know about this, except for that, everything is clear. But if the lack of evidence is both material and pervasive, you should disclaim your opinion. You're not in a position to express the opinion. Is this clear? Within the audit report, the basis for opinion paragraph is a complementary paragraph after the opinion paragraph. So the basis for opinion section refers to the professional standards which you have followed in order to determine or in order to conclude the opinion. So if your opinion is an adverse opinion, your basis for opinion would be the basis for adverse opinion. If your opinion is based qualified opinion, your basis for opinion would be basis for qualified opinion. So it's a support paragraph. All of you have got 5 minutes. Please understand what is right in front of you. Try to understand on your own. Example for other meta paragraph could be an upcoming accounting standard, political situation, what percentage is considered material and pervasive. It's a matter of professional judgment. The auditor will perform the judgment and will conclude. So there's no particular or definite benchmark for that. Fiza Asif is clear, and it's nice to know that. Asnan is clear. Okay, please read this slide so that we could move on. I didn't get your question. Yes, in order to determine the materiality, RAP is used. Absolutely. If there are 4, 5, 6 material misstatement, obviously as a whole, they should be considered as material and pervasive. Sir, after additional paragraph, key audit meta paragraph on 6th number, I didn't get it. Okay, considering the fact all of you are absolutely clear with this, let's explore the past paper questions which 99% students will get in their final exam. So this is one of my personal favorite question called gooseberry. The part A is about substantive procedures on research and development. The part B is about substantive procedures on depreciation, property, plant, equipment, I-16. The part C is about bonus, and we are already done with substantive procedures on bonus. We did it yesterday. Now I want to explore the part D. Okay, so read the requirement, discuss the issue. So you have to discuss the issue from the question itself, and you will get 1 mark for that. And then describe the impact on the auditor's report. So you have to tell me what accounting treatment should have been adopted by the client, what mistake they have already performed, what is the materiality of the issue, in order to make if the issue remains unresolved. So if the issue remains unresolved, you have to explain what impact it will have on the audit opinion and on the audit report. Okay, maybe you are not clear with respect to this question, no worries. In order to understand this part D, first of all, you need to try this part A about research and development. So all of you have got 2 minutes. Read the background. Read this. 2 minutes. Read this, please. The numbers are important. The nature of the company's business is important. Read the first paragraph. You have got 2 minutes to do that. Yes, Saad Jangir, you are absolutely right. Mahat is saying, sir, if we highlighting any issue in emphasis of matter, then why we doesn't solve it? And the issue which we are highlighting using an emphasis of matter paragraph has been correctly dealt by the client in accordance with the accounting standard. So I can't modify my opinion. but I think it's important that the users should know about it. So I'm just highlighting it. Are you clear why I'm using emphasis on meta paragraph? Similarly, Mahat, there is an issue relevant to the going concern of the company. The client has appropriately disclosed it. No mistake with respect to accounting standards or any other thing. I just want to highlight that particular uncertainty. So I will use MURGC paragraph. I can't modify the opinion because the client's accounting treatment is the correct one. Are you clear, Mahad and everyone? Fatima, you need to contact me on WhatsApp. I'll let you know. Pervasive sonica is something which will make the whole set of financial statements as useless, as trash. Okay, Sonika wants to know any example. Well, why not? Maybe there was an impairment expense which the client did not recognize. And if the client would have recognized that impairment expense, maybe the year end profit could be transformed into year end loss. Can we consider the term pervasive as that specific method has no link with other fine? Well, no. Ibrahim, your question is not appropriate. Okay. MN, is any question on subsequent events apart from? Yes, if you want to prepare the topic called subsequent event, you need to work on the test your understandings of the subsequent event from the book. Within the Kaplan kit or BPP kit, you will not figure out any long question on subsequent events. So if you want to prepare questions on subsequent events and going concern, you need to focus on the study text. Okay, guys, are you done with the first paragraph? Please say yes so that I could move on. Are you done with the first paragraph? Okay, well done. Now let's read the first requirement. Describe the substantive procedures the auditor should perform to obtain sufficient appropriate audit evidence in relation to the research and development expenditure. Okay, now all of you have got another 2-3 minutes. Please read this story. Read this story, please, please, please. So are you done? What kind of procedures we can apply? First of all, we need to get the breakdown of this 1.9 million. We have to cast it, right? We need to obtain the schedule from opening balances to the amounts added. Similarly, we need to get the supporting documents in order to verify that the amounts which they have capitalized, it does meet the capitalization criteria. We need to make sure by having a discussion with the management that on what assumptions the directors have, utilize, the directors have figured out the useful life as 3 years. We might want to compare their amortization policy and the useful life with the industry average. So last but not the least, you might want to review the disclosure notes in accordance with IAS 38 intangible assets. Make sure it is in line with IAS 38. Okay. Now I've got serious doubts over this 1.9 million. I've got serious doubt whether everything does literally meet the capitalization criteria. I don't think so, because IAS 38 is very strict when it comes to this. Research costs should always be expensed out. Development cost could only be capitalized provided the criteria for the capitalization, is fulfilled, such as sector criteria. Now, if you are clear with respect to these procedures, now please read this requirement all over again. Discuss the issue and describe the impact on the audit report if this issue remains unresolved. So management is not listening to you. They are being very stubborn. Now, what's the issue? Please read the question now. During the audit team discovers that the intangible asset balance includes, out of that 1.9 million, forget about the 1.9 million now, here is a new number, includes 440,000 related to one of the 9 new health and beauty products development project, which does not meet the criteria for capitalization. So we are not going to calculate the materiality with respect to we are not going to calculate the materiality with respect to 1.9 million. We are not going, we just forget about this 1.9 million. Let's focus on what? 440,000. So that 440,000, according to the auditor, does not meet the capitalization criteria in accordance with IAS 38. As this project is still going on, the finance director has suggested that no adjustment is made. What do I mean by no adjustment is made? It means that finance director is not willing to write off that 440,000 from the intangible asset and charge it in the profit or loss account. It means as we speak, intangible assets are overstated by 440,000 and the profit is also overstated because it should have been expensed out. The finance director is confident that the project will meet the criteria in the next year or during the next year in 20x6. What about her opinion? Do you agree with her opinion? Is she right? If the criteria will be, fulfilled with in the next year, is she right? I mean, no. Anyone else? No, no, no. Yeah. Her narrative that we should not make an adjustment because the capitalization criteria will be fulfilled in the next year is bullshit. It's not allowed according to IAS 38. IAS 38 says when you will be able to meet the criteria, only then on you can capitalize the amount. So this 440,000 needs to be immediately charged in the profit or loss account within this year's profit or loss account. Now, how to get 5 out of 5 marks? Let me tell you how. First of all of you calculate the materiality of this 440,000 with respect to the company's assets, because it will be removed from the assets, and calculate the materiality with respect to profit before tax as well, because it needs to be written off from the profit or loss account, and that will lower down the profit before tax. Do the maths, calculate it. 440,000, you can write 0.44 million divided by 37.2 million, or 0.44 million divided by 6.4 million. Do the maths. Okay, thank you very much. How to develop the answer? Okay, here it is. Part A asks for substantive procedures in relation to research and development. Think about the accounting treatment required. Think about what IAS 38 says. Yeah, we all know when it comes to research and development, the criteria is very strict. And we all know that the research cost needs to be expensed out. Development cost could be capitalized provided the criteria is fulfilled. So don't forget the easy marks such as recalculating the breakdown and all that. Okay. What about part D? Part D asks for audit reporting implications if the issue remains unresolved. So first of all, you should discuss what the issue. Okay, let's highlight the important things. What is the issue? So we need to discuss what is the issue. That will give us 1 mark. We have to explain that the client is doing something very wrong. Then we have to tell them that what adjustment is required. Sorry, whether the adjustment is material or not. So second mark could be obtained by calculating the materiality. Third mark could be obtained by expressing what correct accounting treatment should be made by the client. But considering they are not doing it, I will express my opinion, and I will also express my impact on the audit report. So there are 4 things in front of you, but overall there are 5. Let me repeat. First of all, discuss the issue, then calculate the materiality, then explain what the correct accounting treatment should have been. Fourth, considering they are not making it, they are not making the correct accounting treatment, impact on the opinion, and then last, impact on the audit report. Okay, let me make it more simple for you. Wait. Go back to the marking scheme. We'll have a discussion of the issue from the question, 1 mark. We'll have a discussion on the calculation and conclusion of materiality, whether it is material or material and pervasive. Then I will propose the correct accounting treatment, but considering they are not going to listen to me, I will then propose what kind of opinion I will come up. So this is basically 2 marks. A, you will express the correct accounting treatment, then you will express the impact on the opinion. Last, the impact on the audit report. What do I mean by impact on the audit report? It's about the basis for qualified opinion. Now let's see what the solution has to offer. One of the new health and beauty product the company has developed in the year does not meet the recognition criteria under IAS 38 intangible assets for capitalization, but the company has incorporated it within the intangible assets. So that's the introduction from the question, 1 mark. This is not in line with IAS 38. It should have been expensed out in the profit or loss account. This amount represents 6.9% of the profit and 1.2% of the total assets. So it is material to both the profit or loss account and the statement of financial position. Management should adjust the financial statement. They should write it off. But considering they are refusing it, the auditor's opinion will be a qualified except for opinion, but not a pervasive one, because this is only one adjustment. It does not mean the whole financial statements are useless. The basis for qualified opinion paragraph would be added right after the opinion paragraph, and it will explain that the assets are currently overstated and the expenses are understated. Is this clear to you? Can you now prepare such questions on your own? I need confirmation on that. I am telling you that 90% of the worldwide students will be tested with such an exam requirement. It's a very common exam requirement. So yesterday I recommended a question called Pineapple Beach Hotel. So the part A is about procedures on depreciation. The part B is about procedures on food poisoning. All of you have got 2 minutes to read this part C first. Sorry, part D. Read the part D. Don't get the written representation from the management. Apart from that, you need to describe the procedures which the auditor would perform in order to obtain sufficient appropriate audit evidence in relation to the food poisoning claim. Procedures on the food poisoning claim, that is on provision. Okay. Now read this. Take your time. Read this. So are you done with this food poisoning story? So what kind of procedures we can apply? First of all, if they have recognized a provision, I will cast it. If they have recognized a provision, I will have a discussion with the directors on what assumptions they have made it. Let's say if they have made it, I will review the correspondence between that party and the client in order to understand the issue. I might want to contact the lawyer and get him on board. I would like to review the board minutes of the meetings. Last but not the least, if they have disclosed it, or if they have recognized a provision, or if they have disclosed it as a contingent liability, I need to review the disclosure notes. So can I have confirmation? Are you clear on the substantive procedures with respect to this food poisoning claim that is on provision? Are you clear? Please confirm. Please confirm. More. MN, Fatma, Osama, Chivani, Bilal. Thank you. Well done. Okay, Fiza. All of you are clear. All of you are only clear if you attended and prepared the last lecture. Okay, now why I'm building up. I'm building up to something. I could have jumped straight away into it. Now, check out this part E. Discuss the issue and describe the impact on the audit report. Again, if the issue remains unresolved, 4 marks. Normally there are 5, but over here 4 marks. Now you have to read this story by yourself and then develop the answer by yourself. It's up to you now. Read it, please. The auditor wants to get the written representation from the management, but the management is not willing to provide the written representation which the auditor is looking for. What happens now? Part E is a reporting requirement focused on an inability to obtain sufficient appropriate evidence. It's not about material misstatement now. That's the other way around. You are unable to get what you want. You are unable to gather the evidence. So because the directors are refusing, take the usual approach to determining the implications. A, have a discussion. B, discuss the materiality. C, check it out if it is material or pervasive. So the answer approach would be the same. Implications for the audit report. Now you can read it on yourself. The lack of a signed written representation letter means the auditor does not have the evidence what he wants. Now the opinion would be modified except for, not the disclaimer of opinion, because the lack of evidence is material but not pervasive. So I will go for the qualified opinion, not the disclaimer. And with it, and the basis for opinion paragraph would be transformed into what? The basis for qualified opinion paragraph. So now read this paragraph. This is extremely important. As the written representation letter covers many aspects such as confirming the directors have recorded all transactions and the financial statements have been prepared, properly prepared, and they have provided the auditor with all information for the audit, the refusal to sign the letter casts doubt over the management integrity and is likely to be considered material and pervasive. Because this is extremely an important issue and the management is, disowning it and they are not cooperating at all. I doubt on everything what they have provided. So that is why this lack of evidence would be considered as material and pervasive. So I will go for the disclaimer of opinion. Why? Because this lack of evidence is a huge one. It's not you are not able to obtain the evidence on a purchase invoice. It's not about you are unable to, gather the evidence on a particular sales order. It's about management is not willing to cooperate. They are not acknowledging their prime responsibility. So if they are not willing to sign the written representation letter, this is considered as a huge thing. So this is an important, extremely important question. Are you all clear? Well, I will try to refuse a client if management is not cooperating, but if it is not possible to refuse, I will go for the disclaimer of opinion. Mahad, it is pervasive because the management is denying their fundamental responsibility of acknowledging their responsibility. That's huge. I would have gone for the qualified except for opinion if I'm unable to verify the invoice of a particular fan, a particular gadget, a particular machine. I'm unable to verify a particular sales invoice. But this is huge. Management is disowning their responsibility. If there is anyone out there who wants to practice more questions on the topic called impact on audit report, you have got plenty of it. Wait. So this is a question called Andromeda, and the last part is again auditor's report. Same story, IS 38, intangible asset. They have same story. Andromeda. Somebody write the names of those questions. Andromeda. Andromeda. Pineapple. Gooseberry. Pineapple. Gooseberry. Andromeda. Insects for you. Dashing. A very important question, Jasmine. So this is it. All those questions. Okay, so we are done. What about the recordings? You will find the link for the recordings from the WhatsApp group. Now, how are you going to join the WhatsApp group? This is the number. This is my personal WhatsApp number. You can contact me on that number and I will share the WhatsApp group link. Yes, pervasive means something which affects many things. Or on its own, it's a huge thing. Okay, so anyone out there who's looking forward for a plan or something, Well, the plan is a simple one. I guess you need to, how many days do we have till exam? Okay, today is 23rd August. So you need to finish off your preparation till 31st August. And then on first, second, third, fourth, 4 days, you need to solve 4 mocks on your practice platform. Obviously, those mocks won't be marked by an expert tutor because it's too late. If you want it to be marked by an expert tutor, you need to attempt mock earlier. That is maybe on 24th August. Okay. Now, so minus this, minus 23rd August, we have got 4 and 4, 8 days. So what about these 30 questions? We have got 8 days, right? So what you can do is that you need to solve 4 questions per day, but twice. So that's the plan. 1 question on risk, 1 question in controls, 2 questions on substantive procedure. That should be your plan for every day till 31st August. And then the mock, then the past papers on the ACCA practice platform. This is it. I will share this slide, don't worry. What about MTQs? 3 MTQs at least in the morning from the BPP kit, 3 MTQs at least in the evening from the Kaplan kit. There is no doubt on it. Is this clear? Any other question now? Yes, there is a WhatsApp group. You can join that WhatsApp group. This is the number you need to contact on. Okay, guys, thank you very much. It was a privilege and an honor, and I tried my level best to cover every aspect of the syllabus. I tried to ensure that the core exam topics, the problem, not the child, the problem children rather, risk controls and substantive procedures should be addressed at, at an easy pace. We solved couple of questions for those topics, so that makes 6 questions. 2 questions on risk, 2 questions on controls, 2 questions on substantive procedures. 7th one was on ethics, 8th one was on corporate governance, 9th and 10th, or you can call it 9th, on internal audit, and then finally you can say 10th question on audit report. So we covered a pretty handsome number of past paper questions from the recent past papers. So you guys are most welcome. Thank you very much. And thank you very much for your kind feedback. I am definitely loving it. And I wish you all the very best for your future, not only the AA exam, but beyond that. And do join a professional firm of accountants, an audit firm, right after your AA exam. And I hope to see you somewhere in AAA, maybe, considering you will have a successful day on Monday, 5th September 2022. So we don't need to have a conversation on AA anymore, but do update me about your result, and I'll see you somewhere in AAA. The last P2P webinar for the AAA was, conducted by me. So maybe you never know when you are going to attempt AAA, I'll be there. So thank you very much. It was lovely to have you on board, as you guys participated a lot in the chat box. So it was wonderful to have you. The question and answers were really helpful. And if I have missed out your question, A, I beg your pardon. B, you can contact me on WhatsApp. Probably I will be answering your questions tomorrow after a sweet break. So thank you, Rabia. And thank you, Anshara. Thank you, Ibrahim. Well, Ibrahim, you're most welcome. And thank you, Fatima. And don't forget, the student life is a very ordinary life, and it will not lead to the success story you are looking forward to. So join an audit firm as soon as possible. Do not enter the industry directly. invest bare minimum 1 year in an audit firm. Ideally, well, who hates the big four, but try to go for the medium sized firm. If not big four, if it is a big four, why not? Uh, if you are going for the tax and double A both, try to start your day with double A because it's a theoretical paper. It needs relatively fresh mind. And when you are a bit tired, have a break and then go for tax. And when it comes to double A, go for the quality rather than quantity. Thank you very much, Bhumika. Thank you. So there are many things which I might miss out. Medium-sized firms are gold because they tend to give you more work and they tend to change you from client to client to client to client. On the contrary, the big firm, they are super duper awesome, but the big firm might put you at a particular client and maybe at one particular item, let's say receivable, and 6 months may go on and you are still over there. So medium-sized firms are also not that bad. Okay, Mahad, I'll see you soon. Thank you, Naila. Thank you, everyone. Okay, goodbye. Thank you so much for your wonderful feedback. I'm loving it. Thank you. Working in UK accounting, can I switch? Can I? Oh, I missed it. Oh, can I switch over to audit sector? Why not? Why not? Okay. Thank you very much, guys. I'll see you soon. Bye bye. Best of luck. Stay aggressive and sleep well before your exam and go with an aggressive attitude. And if there is any point, any MTQ, any point, any procedure, you're not getting it, move on, move on. You just need 50 marks to ace this exam. You don't need 80, right? Nobody needs 80. Well, if you will end up at scoring 80, why not? But don't target 80. Don't go crazy about 80 or 70. Don't go mad. Don't be obsessed about 70 or 80. On the exam day or when the exam is around the corner, when you are left with a couple of days only, just say, oh, I need to make 50 mistakes and I need to make 50 correct answers. I just need 50. Chill. You just need 50. Okay, guys, thank you very much. Bye bye.